the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, April 30th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn down a penny at 465.5. May soybeans are down 2 3/4 at 1179.5, and May Chicago wheat was down 8.5 at 633 3/4. This morning we got weekly export sales. Pretty solid week for old crop corn there, 1,597,800. Upper end of the range was looking for 1.9 million. So good solid week there for corn. Nothing sold in the new crop. On the soybean side, pretty disappointing, 258,100 on the old crop, just 3,000 for new crop there. Wheat, 226,100 for old crop, which was in line with estimates, and 156,700 for new crop, also in line with what the market was looking for. On the meal side, 294,900. That's right in the middle of the range there for old crop, 300 for new crop, and we sold 3,400 oil on the week. Overnight, D's corn, we got up to 499 3/4 there. We've got first notice day here. Lots going on. Dustin, why don't you share a few thoughts to get us rolling here this morning, and then we'll throw around the room.
Yeah. Good morning. Thanks, Dan. Yeah, I think we're still in a highly uncertain time frame. I think Brad put it out in the War Room report this morning. The dryness that we're expected to see over the next couple of weeks in Brazil's second season area. And we also had crude oil hitting new contract highs, last night. Now it has subsequently taken a big dive since then. And I think that corn kind of follows that a bit. Could explain why we hit a new contract high in corn overnight, and now we're 2 cents lower coming into the day. This will be a big, interesting point here. It's all, I think Justin made such a good point about how it's weird. Everything's going up, stocks, energies, grains. It's all one big move. It feels like the fact that our long-term rates were flirting with and above $5 and now, kind of coming back down a little bit overnight. And then threats of intervention by Japan on their currency, and threats of intervention on the oil markets too by Japan. There are so many moving parts that are all connected to this. And while I think corn's got pretty good fundamentals on its own, it's really about the tailwinds we're kind of forced to talk about now, right? Is it the tailwinds of currency, tailwinds of energy? Until we actually get into weather in the U.S., I think that's still our main focus. And we're not oil traders, we're not equity traders, right? But unfortunately, these things are very related to that at the moment. And I think until we get through a little bit more of Brazil's second season crop, see how this dryness continues, we're going to be still focused on where oil goes right now.
Morning, Justin. What are your thoughts this morning?
Trying to find my mute button. Okay, got it. Yeah, to that point, just kind of adding to Dustin's point. I mean, just, maybe this is the, what we saw, pumping money into the system by every country for years and years and years. And we've talked about, for a long time now about just the available money supply and, every country pumping in money. And, we went through COVID, we went through a lot of different geopolitical things. And, are we just finally seeing where there's just so much liquidity out there that, chasing too few assets? You look at, market cap valuations of these companies in the trillions. I remember, this seemed like that long ago that we were trying to figure out which stock would hit $1 trillion market cap first. Was it going to be Apple? Was it going to be Google? And now it's just trillion IPOs we're talking about coming out this year. So I think it's just, there is consequences to just printing money for years and years and years by every major economy, every major country. So I do think that's definitely part of it. Now it can go against you, right? If, money, money and volatility and those things can all move and decide, this is my favorite thing now. This is the thing I don't like today. So I do think the volatility story will stay here. I will say, as I look at all these markets, the one that still has is priced fairly is corn. I mean, we're still the cheapest. We're doing a lot of business, more than we need to. It's got a great demand base. Ethanol is cheap relative to gasoline. Ethanol stocks are falling. So I think fundamentally corn's got the best story. Maybe soybean oil if you put it in there, but that's a tough one. You've got, the soybean complex so high over South American prices, to the tune of, soybean oils, 15 cents to 20 cents a pound over South America prices. I mean, we used to kind of, freak out about, 5 cents a pound or 2 cents a pound over. Now we're 15 to 20, so that's kind of more of a renewable diesel play, RIN play. So just a lot of things going on here, to Dustin's point, a lot of different variables to try to figure out. So if I was saying just fundamentally, I would say corn's probably the most supported on breaks. Beans so far have been supported on breaks because it's just buying, just fun buying. But I don't think, as we go into the gut slot of harvest for South America, to be this big of a premium in soybean complex is kind of risky.
Justin, our buddy No-Till comes to us this morning. He sold some fall corn and beans, but I think bears a good question. You have talked quite a bit about 27 out forward and stuff like that. Maybe share a few thoughts there. He's talking about locking in prices, and I know that there's still so many unknowns and things like that. But I guess what's your thoughts out forward?
Yeah, I mean, it's hard not to do something here. We came out with a rec actually yesterday for 27 corn. I think with, $5 flat price and option vol where it is, there's some really interesting things to do. Knowing that you still have your farm bill out there, you kind of know where all these things are. I think it's been a while since we've been able to sell out forward prices like this and these kind of volatilities. So yeah, it's hard not to look at it for sure. I mean, we were at, that contract, these 27 corn was at, sub 450 not that long ago. So again, it's hard. It's always hard going out forward and getting too aggressive because you don't know what input costs are going to be. You don't know what fertilizer prices will be. You don't know all these things that are going up right now. So you got to be a little cautious there. We were talking about it yesterday. I think margin protection policies might be a big thing this fall. All those kinds of things. So yeah, I think you have to look at it. I think you have to start, nibbling away at it for sure. But also keep in mind that it's hard when you don't know what your expenses are. So yeah. You look like a genius if you sell a whole bunch of it and everything gets a lot cheaper, obviously. But you could also be looking at shit, it cost me $5.50 to grow corn now and I sold a bunch at $5. So that's always tough.
I have a question, not to get you off guard here, just to switch over to like the product margins. If Jackie, you put up that last chart I just put up with the two lines. So this is oil's share is in black. It's at 52.5% right access, and then crush margins. And this is all new crop, right? This is D crush margins, D soil share. Crush margins are up to a new high at $2.75. So what are the implications of this politically? At some point would we be concerned about some sort of allowing of foreign feedstock again because this is getting out of whack? or is this just an answer that has to be solved by the market through rationing?
I think this is something I talked about yesterday with somebody. I think the market's doing its job, meaning that, even if they don't get a credit, right, for used cooking oil or foreign feedstock, it goes and prices that in, right? It goes to the price where, okay, I know I don't get a credit, but I can still bring it in cheaper without a credit. So I think that's just the market will figure that out. I think that's what it's trying to do. And that's what's so unique about, we've never had, even though we've talked about this and speculated about this for years with the renewable diesel, to see crush margins led by oil, this is really the first time probably in history, which makes sense because that's what we built all the crush capacity for. So you could have these, elevated crush margins, and naturally you look at a $2.75 crush margin, you're like, well, this has to be really bullish beans, right? Because you make so much money crushing it. Well, at some point it is, but you run into crush capacity issues. You can only crush what we can crush. And with exports, we've basically rationed the export part of the demand market, right? So you're going to crush max crush, whatever that is, 220 a month, 230 a month. You're going to hit that max of whatever it is at these margins. But when you're so much cheaper than South America, right, you cut all the export demand out and you still have plenty of beans. So I think that's where it's tricky, because historically you would say, oh man, this, crush, we have to go up because crush margins are so high. I think it's different in this scenario. So, and maybe at that point, we start bringing in South American oil. I mean, we are at such big margins that you would think we would start bringing in South American supplies if we continue up here. My opinion.
Very good.
Ben, what's on your mind here this morning?
More of a short-term view. We made a new high last night, and we're trading lower, and we're working on an outside day. And there's a flag there, 3-day flag in corn. So I'm not ruling out a modest setback from here. That's the main thing that I'm looking at right now this morning. By no means it's not 100%, but I think that the bulls are going to be tested here for a minute. And yesterday, saw a tremendous amount of volume, from the highs down 2 or 3 cents. And bull markets have to get to a point where they can run and there's an absence of sellers, and we did not have that yesterday. So maybe just some short-term caution here, I think, is kind of what I'm looking at. And that being said, I don't want to speak out of both sides of my mouth, but I'm going to do that. Is bull markets have a tendency to flash signs and signals that traditionally you would say this looks like you should be shorting it, and then completely blowing it up. So I think corn's going to have a little bit of a test maybe today and tomorrow.
Guys rolling up by you, Ben? Northern Indiana?
No, we're wet. From call it north of Columbus, kind of around the horn there, north of I-70 and over, has been very wet. Client kind of northeast of Columbus has planted 100 acres of beans so far. Looks like we're going to get some more rains this weekend, and then I think there's going to be a window to plant. South of I-70 is one of the best planting windows that they've had in the last 6 years, followed on by good rains after that. So they're sitting good, and they're a place that typically runs into real wet weather problems during planting. So everyone else is, the northern third of Indiana and Ohio, or maybe northern half, are having some difficulties, but looks like they're going to get a window here pretty soon.
Beautiful. We got a couple minutes here, Rye. Cattle just started on fire yesterday, never looked back on the heels of Tuesday's, I'd say moderate cash surprise, and really solid for hogs as well. So what are your thoughts?
Yeah, absolutely. New contract highs. We added 3,400 in open commitment, so it just feels like we're still seeing buyers pretty aggressive here. Obviously, the hedgers are as well, right? We're seeing these just fantastic prices in the back end of the market. New highs for the move, and cash prices, record highs, getting up to 257 yesterday, 256 to 257 in Texas. So that's $10 to $11 higher for the week. 401 traded on the high side and dressed as well. So when the Packers really need something right now, they're kind of stuck and they really have to pay up. So obviously we hit some pretty overbought levels yesterday. I wouldn't be surprised to see a little bit of a correction here in the tail end of this week, especially if Packers start to back off the buy a little bit. So April expires today. June's going to take the front option. And I think we're going to still see, maybe some of that length get pushed out to August. But it's been just a spectacular move. So I would imagine that trend is probably still going to hold up here for a while. And I wouldn't be surprised just to see a little bit of a setback in general. On the hog side of things, finally saw a little bit of support. We got June just pop triple-digit gains right up to the 25-day moving average and stopped. So we did see some cash improvement 2 days in a row here. Now, I mean, we were up 69 cents yesterday at 93 1/4. So I want to see that continue. I think seasonally we should be kind of drifting higher, maybe a little bit more of a slow grind, but we are in that time frame. Things should improve. Obviously, we're not seeing that improvement on the carcass side. Belly's down 670. We were down $1 in carcass overall at 97.20. So would like to see that really start to lead here overall. But right now, just looks like we're kind of stuck a little bit, just need a little bit more of a push from the carcass side.
Very good. Appreciate the update there, right? Just came into the open here. We got May corn down 3 now, 463.5. May soybeans are down a penny at 11.81 1/4. And May Chicago wheat's down 12 now at 630 1/4. Tomorrow is Friday, so it will be Fun Fact Friday. Jack will be stepping in and doing Fun Fact Friday for Brian. So who knows what we'll get there. Be sure to tune in. It should be a riot. Also, check out Dustin referenced the War Room report here in the show this morning. Check it out. The link is in the description. Gives a deeper dive into the things that we talk about on a daily basis here on the War Room, as well as premium content, reactions to USDA reports. So take a look at that. Also, a portion of those subscription fees go directly to support the AgYield NextGen Foundation, which supports our national scholarship competition, which brings me into my next point. If you enjoy golfing, want to meet and mingle with the whole team here on the AgYield War Room, as well as a great day at Aurora Country Club, July 27th. Check out the first AgYield NextGen Golf Classic. We will be honoring the scholarship recipients from our first competition. It's going to be a great day. So check that out. If you got any questions, give us a call. We can get you set up there. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content, all for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.